I bid you good morning, good evening, and good night, wherever you may be watching this transmission. It is I, Mike Martins, guys. Thanks for joining me. Guys, I have a really important article I need to share with you guys. It is very important. Now, this is something that we've been talking about for ages, and this is something that we've been pinpointing and connecting the dots here since pretty much 2010. A lot of people that are still subscribed to this channel were subscribed to my first YouTube channel that was taken down around 2012, 2013 because of my in-depth perspective look on the housing market. They just took down my channel with no questions, no debates, no arguments. So guys, let's go really quick to this article. I don't want to waste too much of your time, but this is very important. So guys, don't forget, if you can, I would like, if you can, to go and set your reminders here for the Mike and the Knights reminders. I really appreciate that support. Just go and set your reminder. A lot of people have not been receiving their reminders when I have been going live. I'm not sure if it's a glitch. I don't know. I don't even trust anything anymore. So let's switch over to article scan here. Here it is, guys. Chinese buyers are kickstarting a generational housing market rally, and Bitcoin may be next. It's gonna go crazy in 2021. Why? Because it won't be election year. Right now, the administration is uncertain, and a lot of foreign investors want to park their money outside of China. And right now, because it is election year in America, they're kind of on the fence with where to put their money. I could see that if the Trump administration wins the election, I could see a lot of Chinese investors selling in America and moving to Canada to park their money in a more stable liberal economy or liberal-run country, right? Same thing with Australia. You start to see that. So Chinese buyers are kickstarting a generational housing market rally, and Bitcoin may be next. This is by Joseph Young. He's a contributor, and I've read a lot of his crypto/money market stuff, and he has contributed to Forbes. This is Forbes, guys. This is not this is Forbes magazine. This is not some Yahoo printing press. This is actually a big distributor of business discussion here. So here it is. Chinese investors are aggressively starting to purchase international properties once again. The rising demand for real estate from buyers in Asia may catalyze prolonged housing market rally as seen at the start of 2001. See, it says 2001. I believe it was 2000 because I remember during the Vancouver Olympics when in 2000, when the Vancouver Olympics kicked off. No, it wasn't it was the 2010 Olympics in Vancouver. I'm sorry, guys. 2001 is when they started to do in the United States these jumbo mortgages, low rates, blah, 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 all this cool stuff from 2001. And then this led to a market rally that actually crashed in 2007 and tried to bail it out in 2008. And it was an absolute disaster. And nothing's been right since we started printing money and bailing out these big corporations. And nothing has been set right since then. Okay, sorry, I had to correct myself there. But 2010 in Canada is when it really went crazy because everybody thought that the housing market was going to crash in the 2010 Olympics, and then that's it. Right then and there, boom. Housing just took off to the roof. Residential and luxury properties across many countries, including Singapore, Australia, Philippines, and South Korea, are reportedly being bought up. Wealthy investors are taking advantage of declining prices in global housing market in post-pandemic environment. Manila, one of the hottest real estate markets in Asia, is set to see 15% drop in value, according to a local broker. Investors from China are waiting on the sidelines for a rush sale. So I spoke to Durant. His name is Durant, and he's been telling me that there's a rush sale of people waiting to buy in Toronto, Vancouver, Sydney, Melbourne, Auckland, Christchurch, London, I think it's Manchester, and Dublin is looking at a correction too. So all over the Commonwealth. Real estate brokers across Asia observing similar trends when the floodgates of Chinese buyers opened after initial dip in prices. The probability of housing market appreciation increases. A study conducted by researchers in South Korea's top national research university, KAIST, and China's Peking University found that the housing market saw a boom after 2001 recession due to low Fed fund rates. So it wasn't the American proper in 2000. It was the American proper in 2001. Sorry. And this is when things started. The feds and all these Fannie Mae and Bernie Mac and all these big companies started the front lines of consolidations, cheap money, jumbo loans, sign up, and then the rates would automatically change after a year. 1% for a year, 2% for 2 years, 3% for 3 years. I saw all kinds of weird stuff. And I even saw interest rates go up on some mortgages, even though they were tied in for 5 years. I saw a mortgage rate went from 1 to 6%. And he was tied in for 1% because the clause in the mortgage allowed the lender to adjust, and it wasn't a variable rate mortgage. I don't know how he didn't take that to court and sue their pants off. But there's all kinds of Mickey Mousing going on. Considering the tendency of the housing market to rally after a global financial setback, investors are expecting an extended uptrend in the medium to long term. The researchers wrote, after the 2001 recession, the Fed kept the funds below low 2002 and 2004 to revitalize the economy. Low-income households were able and willing to pay a monthly mortgage payment. So in 2001, 2004, low to medium income earners were looking at a chance to live the American dream and buy a piece of that pie, right? Due to low mortgage rates, but also due to appreciation of house prices, this led a housing boom and unsustainable mortgage market. A confluence of the Fed funds rate, additional stimulus from central banks, and a prospect of a V-shaped economic recovery in the coming months can lead to higher demand in the U.S. housing market. The European Central Bank and the Trump administration are considering another multi-trillion-dollar stimulus package to stimulate the economy in the second half of 2020. The Federal Reserve current interest rate at 0% at 0.25% further provides relaxed financial conditions. And guys, I woke up this morning at 6:30 ready to push the button to sell on my stock after the United States yesterday announced it was in a recession. And man, did I do well selling that stock. Economists also anticipate U.S.-China relations to improve in the third quarter of 2020 as both nations focus on recovering their respective economies. Morgan Stanley, MS, chief economist Chiten Ayaha said that the Trump administration will want to keep a phase one deal in China as long as the agreement remains intact, that the U.S. and China may continue to see their economies rebound. At the moment, Chinese buyers are struggling to enter the housing market of the U.S. due to the strict restrictions imposed by the Committee of Foreign Investments in the United States. And this is not good, but it doesn't really matter to a point. The ones that want to come in want to go on the buses, or the tour buses, and go shopping for homes. A lot of people buy 10 to 40, 50 homes and then go back to China or go somewhere else. They don't live in the States, right? They just want to park their money there, right? And that's an issue because the American proper can't buy in a lot of their own cities anymore. And I love it when they blame it on the tech giants. The CFIS can reportedly require a fee up to $300,000 depending on the property from foreign investors. As a tension between the U.S. and China eases, the hefty fee is reduced. The U.S. housing market is likely to see an increased demand from foreign buyers like other international markets. So the CFIUS is reportedly require a fee up to $300,000 depending on the property from the foreign investors. So if you guys don't know, Chinese investors are buying property and face heightened scrutiny amid rising U.S.-China tensions of the new $300,000 fee. So what is happening with that? Well, what's happening with that is they're actually protecting their citizens by doing that, because then at least it brings some money to actually prop the infrastructure for a while, right? Canada would never do this. But Canada did something, and I'm going to kind of throw this out there in a few seconds, how Canada kind of shot themselves in the foot. Tension between U.S. and China eases the hefty fee. Okay, a surge in appetite for American properties from investors in China would also mean that the Asian economy is strengthening, such as a trend is likely to fuel a rally for gold and Bitcoin, which is increasingly being perceived as stable sources of value and hedge against inflation. A lot of Bitcoin enthusiasts out there will say, Mike, you're crazy, man. Bitcoin ain't going nowhere, and blah, blah, blah. And then some people say it's going to the moon, right? So let me see if I could find the video. I kind of want to share with you guys. If I could find the video here. Here it goes. Here it is. So, like, if you go here, you can see what I'm talking about. Chinese investors buying up Athens. I'm just trying to see if I could find that specific one. This one's crazy. 45 billion owned by foreign investors. What it is not foreign investors. They're a lot of the students and stuff are taking out credit cards and they don't pay them back and they go back to China. And then I guess the other credit card holders that live in the country have to deal with the increase in rates, and everybody has to pay more, right? Let's see if we got here. Chinese investors want a refund on bad investment. New Zealand housing, don't buy anything. A lot of people are commenting on that video and messaging me. Rest in peace, Canadian housing market. There was one video I did. Let's type in Seattle. Hold on. Yeah, I wanted to discuss that $300,000 put in place by, right here. Is it Seattle disappearing middle class? Seattle, King County housing collapse. Seattle housing market in trouble. Let's see if there it is. There it is. I can't find this article anymore. Foreign buyers overlooking Vancouver heading to Seattle at frantic pace. So when Vancouver shot itself in the foot and put the foreign buyers tax on, that screwed a lot of real estate agents and making huge commissions, because then a lot of people went to Toronto. Okay, so this is 2016. That's when the craziness happened in Toronto. The second the foreign buyers overlooking Vancouver and heading to Seattle. Seattle is in complete destruction right now. Seattle went from a beautiful city with the average benchmark price of a home in 2015 at about $310,000. It moved to a point of $700,000-800,000, just like Vancouver and every other city in the Commonwealth, in Melbourne, Australia, Sydney. That basically people could not get out. People that got out, but the people, and I love it how they blame the tech workers. I love it how the tech workers are on the hook for the raising prices in Seattle. So now America turns around and throws this into the mix. Right? Let's go to article scan here. So Chinese investors have to pay a $300,000 fee. So Chinese investors buying real estate in the United States can expect a heightened scrutiny amid the escalation of U.S.-China tensions. Analyst says they might also contend with few filing fee up to $300,000 imposed on federal reviewing body. So this is Americans protecting their sovereignty, is what that is. Right? It's not being racist. If an American wants to buy in China, you can't. You have to be Chinese to own in China. So you got to, look at it both sides too. Oh, but Mike, China's a communist country. Well, everyone calls America a communist country. You know what I'm saying? Or the regime, or the American Trump regime. No, but people need to look at the big picture on what's happening. They're doing that, and I kind of back them on this because they're just protecting the sovereignty of their country. We are in a massive economic takeover in the Commonwealth, and it's been happening for years, guys. And I've been covering this for years because I've been trying to create awareness on this. Guys, please share this video, get this out there, because this is very important. If Canada puts the $300,000 fee, I think that would be fair then. They come in, buy a tear-down home for $2 million. They paid a $300,000 fee. That $300,000 fee could easily go towards affordable housing for the people that built the infrastructure, that were born and raised in those cities, that no longer could afford to buy anything on average wage. Give it another year. And then I'll stop saying. First, I started saying low wage earners at the beginning of the channel. Couldn't get into the market. Now average wage earners. And give it one more year. I promise you, it's going to be high wage earners can afford, and they're moving to the U.S. And Canada putting up that article, 97% of Canadians want the American and Canadian border to remain closed up until the end of this year or next year. So they're doing that for travel, so our doctors and our doctors won't leave. Our nurses won't leave. And that's what's happening. So if they restrict travel like that, then people in Canada, Canada doesn't need to build a wall anymore to keep us in. Right? So let me know what you guys think. Or Canada doesn't need something along its border to keep us in. They'll just create laws to make us not be able to leave. So what a Canadian was doing, what they told me was, because they were going to move down there to do a job, a big job actually, a big contracted job. They were going to fly to China because flights are open. And then from China, they could fly direct to San Francisco. So that's what they were going to do to get into the United States from Canada. Let me know what you guys think in the comments below. Thanks for watching. And let's... look forward to reading your comments. Thanks for watching.